Welcome back to Trading with CJ. We are seeing lots of earnings coming out as of late around some of our favourite penny stocks. And today we are covering one that we spoke about quite a long time ago. Initially in early January, we spoke about Castor Maritime, ticker symbol CTRM, and it's been one that we've been following for quite some time. We're one of the first channels to speak about this one. We have been with it on this ride, all the way up to about 175 per share, down to now what we're currently on, about 75 per share. It's been on a bit of a roller coaster. It is down from early February now, around about 56%, and it just doesn't show signs of stopping, okay? So we're going to get into this one, where I think this will go in the coming weeks, and we're going to, of course, talk about the earnings report. If you want to show some support and appreciate these videos, please go ahead and smash the like and subscribe to my channel as well. That really is appreciated. I also have a Patreon where I give you my buys and sells and exclusive videos. Come and check us out. Link to that is in the description. And we have a Discord with a CTRM channel. So let's get into this one, okay? Castor Maritime. This is the global shipping company. Been a lot of news around these sorts of stocks right now because of obviously the canal being blocked for the past week, which is now freed, but you gotta admit that probably has some sort of impact on these stock prices. People not liking that, people selling. But like I say, we are down substantially. At the time of recording, we're about 75 cents per share. But if you look at where we are in the month, we're down quite a lot. We're actually down about 25%. So it's been a bit falling right now. But yeah, we've had the earnings. Let's see if this gives us any room for concern or maybe some exciting potential ahead. Let's get into these earnings. Okay, these came out just yesterday. So first off, we can see here the highlights from the fourth quarter, and this ended on December the 31st. Revenues, 4.4 million for the 3 months compared to 2.8 million. Growing there, 57% period increase, which of course is great to see. Net loss, they are making a net loss of 0.8 million for those 3 months compared to 0.5 the year before. Now, if we think about it, that's not too dissimilar there. 0.5, okay, yeah, it's more. 0.8 is more than 0.5, of course, but given the fact that, you know, things aren't back to normal, you know, these aren't operating nowhere near the capacity they was, that's not too bad at all. I was actually expecting this to be a lot worse, to be honest. And loss per earnings there of 0.01 per share, which once again isn't too bad compared to the earnings of 0.20 for the 3 months in 2019. I think that's to be expected, okay? EBITDA is 0.3 million for the 3 months compared to 1.1, so that's down quite a lot. And average fleet time charter equivalent, what's this about? Rate of £10,257 per day for the 3 months compared to 10,789 for the 3 months. So once again, not too dissimilar there, only a 5% decrease. So that's that. And then the cash and restricted cash. They do have some cash on their balance sheet, 9.4 million as of December compared to 5.1. And that's obviously to do with, you know, lots of acquisitions, lots of share offerings, etc. It's been pretty exciting, okay, seeing all the news coming out of our Castor Maritime. They have been buying ships after ship, and we're going to, of course, see that in this report. And then you can see here that another 2 ships obviously taken under October the 9th and the 15th. They've taken more ships since, but this is, of course, reporting the 4th quarter here, so it won't feature. And then we've got the highlights here, the earnings highlight of the year. So this is what we really want to see. How they performed over the overall year. Well, revenue of 12.5 million for the year compared to 6 in December 19. 108% increase. They have smashed it. Absolutely smashed it. Net loss of 1.8 million, and that there you can see includes one-off non-cash interest expenses of 1.1 million as well, compared to the net income. So they are making a loss compared to the income, as to be expected in this current situation. EBITDA is up slightly, 2.3 compared to 2.2, and the earnings per share, the EPS there of 0.03 compared to 0.31. So I don't think that's too unexpected. Let's see what the CEO here, Petros, has to say. 2020 was a very challenging year with significant disruptions in global trade flows. And despite these challenges, we progressed on our growth strategy and decisively executed on our plans. This is a testament to our dedication and strength of our business. In 2020, we doubled our fleet size, as we're already aware of, growing from 3 to 6 vessels. And the growth has continued in 2021 with the addition, once all vessels are completed, of another 8 vessels. Absolutely insane. The more vessels in the start of 2021 than they had in the entire 2020 prior to adding these ships, okay? It's absolutely insane. Finally, the dry bulk shipping market is steadily improving, and market participants expect a robust rate environment throughout 2021, which, if it materializes, is expected to drive our revenues higher. Now, I do think that will be the case, okay? Things are going to take time to recover, but we are already starting to see a recovery, okay? These numbers are going to start to go up from here on out, in my opinion. I think next quarter, maybe a bit mid-ground, a bit iffy, but come Q3, Q4, we're going to see really nice revenue from this company. And with the addition of all of these more ships that they're getting, what's that going to do? Bring in more and more revenue for this company. They do, of course, give us an update on the COVID impact, which we could expect. This is really hitting this sort of sector. People buying goods, people transporting goods. It's not as easy as it once was, and they say here it continues to cause turbulence in the shipping industry, particularly in the tanker and dry bulk sectors, which is exactly where CTRM Castor Maritime lies. Although the charter market has shown signs of recovery from low rates seen in the first half, it still remains depressed. We assess the tanker charter rates and are likely to continue to be exposed to volatility in the near term, which is why I think by Q3 and 4 we're going to start seeing some nice revenue turning over, okay? We believe that the ongoing pandemic has caused an impact to our vessel revenues earned during 2020, since certain vessels in our fleet came up for charter renewal in 2020 were employed at less favourable charter rates than those achieved during 2019, which means less income, of course, for this company. So that is to be expected here. They say at this stage we cannot fully assess the overall impact that the ongoing pandemic will have on our final condition and results of operations on the dry bulk industries in general in the long run, as this is highly dependent on the continuity of the pandemic and the extent to which containment measures will be sufficient to restore or sustain the business and financial condition. Okay, so it's not the best bit of news, but they are not psychics, this company. They don't know exactly what's going to happen, just like the rest of us. We're all watching and waiting. We're hoping that we're going to come out of the other side of this in the next few months. And yeah, I really do think that will be exciting. It does give us a bit of news here on the Nasdaq, which is something we spoke about. Okay, they had to regain compliance to stay on the Nasdaq to hit over that $1 mark. Let's see what they say about this. They say, we announced we received a notification letter gaining us the 180-day extension, which we spoke about numerous times. We can cure this deficiency if the closing bid price of our common shares is $1 or higher for the amount of time during the second compliance period. Nasdaq may exercise its discretion to extend such the amount of time to better evaluate the ability to sustain long-term compliance with the minimum bid requirement. We are evaluating all of our options to regain compliance with the minimum bid price requirement with the second compliance period. So they're into the second compliance period now, which is interesting. Okay, they're confirming this, including a reverse stock split. During this time, our common shares will continue to be listed and traded on the Nasdaq. So I think worst case scenario here, they will do a reverse split. So this won't really make an impact on your shares, okay? It just means that the price now is going to be more. Okay, so it's not the best news. We don't like share dilution. We don't like reverse stock splits. However, if that's what's needed to stay on the Nasdaq, I would rather that. I'd rather them have this compliance, so it gives them more exposure to other brokerages and other investors. So I feel like that is potentially what is needed, because right now, of course, that you've seen here, they need to hit that $1 share price. It's been a bit rocky as of late. They could get back to it. We are currently at 75 cents. Okay, so they need to get it back to the $1 mark for a substantial period of time. Okay, it was originally 10 days, but we have dropped below it. So it's going to be interesting to see what happens over the coming months. We are in a bear market at the moment where everything is selling off. So once that stops, okay, hopefully they do regain that Nasdaq compliance. It does go on to talk about the vessel acquisitions, which we have spoke about a lot in previous videos, and they say that we've used the majority of the net proceeds from the equity offerings, which we spoke about as well, to fund our vessel acquisitions, which is good. Okay, not having to take on debt. They're funding it with the proceeds from the share offerings. So that's pretty exciting, okay? And as of December 31st, entering within the first quarter of 2020 into commercial secured credit facility amounting of 4.5 million on our total debt, which is including 5 million related to party debt. And of course, they say here about the net cash used in operating activities was 2 million compared to 1.3. So the net cash was slightly more in that 3-month fourth quarter. So that's just our update today on Castor Maritime, okay? I can't say I'm overly surprised with these numbers, but I am pretty pleased that the revenue's been growing. I think it was 108%, something insane, okay, which is what I wasn't expecting. I really wasn't expecting to be growing that much, okay? And the losses they have taken really aren't as bad as I thought it would be, given everything that is currently going on. Now we just patiently wait this potential remaining on the Nasdaq, okay, and of course we get through the other end of this bear market, we get the pandemic over with, and we start to see a recovery. This for me now is a recovery play. I did speak about a while ago potentially selling out of CTRM at a profit. I am up about 115% at the moment in time. It was a lot higher, of course. But yeah, I'm happy to ride this one out. I can't see me losing money on this at the moment in my current position. Would I add at these prices? If you're looking for a bit more of a speculative, risky play, potentially, okay, it could be a good one. We've seen the financials not too bad given everything that's going on. So yeah, that's my thoughts on Castor Maritime. If you appreciate all this, please go ahead and smash the like and subscribe to my channel. Come and check us out on the Patreon and the Discord. Links to those are in the description. Thanks for watching, and until next time.